Hi everybody, I'm Sergi Kilembe and thanks for joining me for the weekly US market report. Time to trade the markets, the week ahead, perspectives and analysis. Now we are in the month of September, so first we're gonna have a look at the current state of the US economy on the macroeconomic perspective. Next, we're gonna have a look at the economic calendar for the week trading on starting on Monday, September the 4th until Friday, September the 8th of 2017. Next, we're gonna have a look at some news on Business Insider. And next, we're gonna have a look at the markets first in the sectors maps of the S&P 500, and then we're gonna do some charting, some charts, price action and technical analysis, and then we're gonna have a look at cryptocurrencies and do also some technical analysis and price action of the five most renowned and most popular cryptocurrencies. Okay, so now let's begin here with the United States economic indicators. First, GDP growth 3%. That was the last number published. Next, over here, we have unemployment rate at 4.4%, inflation rate at 1.7%, interest rates at 1 and a quarter of a percent. The balance of trade still in a deficit. Government debt to GDP 106%. And over here, currency, the Dixie, the US dollar, is now at 92.87. Stock market at close to 22,000 points, and the government bond yield, the 10 years treasury note, the yield is at 2.17%. Okay, so now let's continue. Now let's have a look at the economic calendar. Starting on Monday, September the 4th, we have nothing of great impact. And next on Tuesday, September the 5th, we have a ABA RBA interest rate decision in Australia. Next, over here in Switzerland, we have the GDP growth rate quarter on quarter Q2. Next, we have the GDP growth rate year on year Q2, still in Switzerland. On Wednesday, September the 6th, what do we have first in Australia? We have the GDP growth rate quarter on quarter Q2, and we have the GDP growth rate year on year Q2. In Canada, we're going to have the balance of trade of July. In the US, we have the balance of trade from July still in a deficit. Back in Canada, we have the BOC, Bank of Canada interest rate decision. The consensus and the forecast is that the rates are going to remain unchanged. And next, back in the US, we have the ISM non-manufacturing PMI from August. Okay, so that's it for our economic calendar. Now let's have a look at some news. And here we are at businessinsider.com, and what we can see, Mr. Kim Jong-un here in first picture, and we have a still warning of nuclear wars, missiles launch and stuff like that. Over here we have Mr. President Donald Trump threatens to cut off trade with China if it does not stop trade with North Korea. So the sanctions over there, excuse me. More about me, President Trump, people of the intelligence, and stuff like that. Yeah, the flooding in Texas, stuff like that. Over here, Moscow demands the U.S. reverse its blatantly hostile decision to close Russian diplomatic facilities. Yeah, big incidents there in San Francisco, if I do remember well. Over here, do we have North Korea may finally be embracing a more consumer-friendly culture. Yeah, over there, people in North Korea. Yeah, the whole story with Amazon and Amazon.com and Whole Foods is the real price of the suddenly cheaper avocados at Whole Foods. Yes, that's it. And okay, yeah, that's it. So now let's have a look at the finance at the markets. And over here, that starts from the top. Markets now. You see everything: the Dow, S&P, Nasdaq, went down last session. Over here, what do we have? Stocks do nothing is what you need to know. Over here, Mr. Gary Cohn, even Wall Street's biggest cheerleader, is tired of the White House, Goldman guys, and their tax plan. Yeah, the whole tax issue. So that's it. Over here, what do we have? No, ExxonMobil, yeah, the whole stuff about oil and what it's happening in Texas. Over here, stocks, the best performing stocks, worst performing stocks. Over here, stories about Apple. You see over here, Mr. Tim Cook, CEO of Apple. And you already know that on September the 12th, yeah, they're gonna release the new iPhone and a new iTV, iWatch, I think. And yeah, if I do remember, so it's gonna be huge. Okay, so over here, energy, this is bad. Gas prices spiked by the most in a decade after Hurricane Harvey. Yeah, the hurricane gas price to the roof. Over here, gold spikes after the job report misses. Yeah, it was a bad jobs report on Friday. And over here, Brazil oil regulator sees total winning license in Amazonas. So over here, more news about oil, so watch out for oil. Now, currencies, what do we have? And the best performing currencies are the cryptos. And over here, first, the fifth largest cryptocurrency surges past $80 per coin. I think it was a Litecoin. And over here, the US dollar drops after the jobs reports misses one more time, and Bitcoin hits $4,800 for the first time, and it was also close to $5,000 per coin. And over here, interest rates and stuff like that. More of Donald Trump. You see, we already tried one of Trump's big tax ideas, and it fell flat on its face. So that's it. And great issue those tax cuts. Over here, an ETF is launching that tracks GOP interests, and its ticker is MEGA. Okay, and over here, after 10 years as a financial planner, I've realized almost everyone gets the same thing wrong about money and what you need to know on Wall Street. And that's it. So now let's move on and let's continue. Over here, let's have a look at the sectors map. What can we see over here? Technology, great week, green week for the technology, except for AT&T and Verizon. Services, great week, everything is in green except for the Disney and Walmart. You see Amazon doing great. Basic materials, great week except for ExxonMobil. Healthcare, great week except for Johnson & Johnson, J&J. Over here, utilities, bad week for utilities, great week for industrials except for defense stocks. You see over here, Lockheed Martin in red. Consumer goods, great week overall, great week for Apple. And over here, textile, you see Nike doing being in red. And over here, financials, you see that's a 50-50, maybe a 60-40. Bad week for Wells Fargo. Remember the false accounts, fraudulent accounts scandal, and JP Morgan over here. Okay, and that's it. Now let's have a look at the ETFs. And ETFs, as you can see, everything in green, the inverse in red, over here the VIX in red, all the sectors in green except for utilities and the financials, large cap in green, mid cap in green, small cap in green. Close the ad. Okay. What else? Over here, international, everything in green. Gold, great week for the gold miners here. Dust, red, dust and GDST in red. All these sectors, everything in green. Over here, commodity in green, GLD in green, SLV in green. Over here, what do we have? Fixed income. Bad week for fixed income. So everybody now is back in the stock market, pumping hits higher. So that's logical. Okay, so now let's go and let's do some charts. I'm gonna go quickly. First of all, over here, Dow Jones Industrial Average, as you can see, great week in green, bullish week. What we can see over here, we are going back towards the 22k. Now we are at just 10 points from the 22k. So now I'm expecting a continuation, and that's it. If we have a continuation, first of all, next week we need a close above 22,000, excuse me, and 100 points. And next target is gonna be to break above the resistance of 22,175 points, and to continue higher towards the 22,400s, 22,500s. Okay, so that's it. Let's see what the market's gonna do this week, but for now, the sentiment, we can I'm expecting more moves towards the upside. Okay, next, let's move on. Now let's have a look at the NDX. That's your Nasdaq 100. Over here, Nasdaq 100. So what happened? Great week. See, very strong candle. That's a powerful candle. Boom, there you go. That's a tremendous, powerful, bullish candle. You see over here, gap up at the open, and next, what did we had a interaction with the 13 weeks moving average, and now over above the 4 weeks moving average and the 8 weeks moving average, and boom, new highs for the Nasdaq 100. It touches the 6,000 points, and now just to close below, now we are at 5,987 points. And what can we expect for next week? More moves towards the upside for the Nasdaq 100. Okay, so that's it. You see, as we gonna come and go closer and closer to September the 12th, when you see on that particular day, Apple is gonna release new products. So huge expectation. So I think that people are gonna go and buy more Apple and Nasdaq shares. You see, and the Nasdaq is gonna follow. Okay, so next, let's move on. S&P 500. That's your US 500. Oh, Hersher, not Hersher. US 500. Okay. The S&P 500, exactly the same thing as the Dow Jones. Bullish week, strong bullish candle. Now we are back at the top of the range at resistance level at 2480 points. So now we need a continuation and go higher. We need to be above the high over here, that high at exactly at 2489, and to go and with that particular marker, what are we trying to do? The market now needs to go much higher. If you have a continuation, also you can see over here a gap up at the opening of the week, and now if you have a continuation, another bullish candle, market's gonna go towards the 2500 points for the S&P 500. Okay, so now let's move on, and now let's have a look at the VIX volatility index. Okay, the VIX, you see huge volatility, great spike over here, inside week candle, 1 2 3 weeks in inside week candle, but we are back at the low of now we are just at 10 points, and it seems to me that next week we're gonna remain here in that particular zone, in that particular region between 10 points and 9 points, 950. So I'm expecting the VIX to go lower, but we also can see a lot of spikes and a lot of volatility during the week. So still in a inside week candle for the third consecutive week, and for next week I'm expecting more volatility, but the VIX remaining low between 10 points and 950. That means that the markets can go higher. Now let's have a look at the XIV. Okay, and the XIV, wow, here you see another thing. What do you see? You see that huge bearish candle, 1 2 3 weeks in a inside week candle, but now you see painfully we're trying to go higher, but you see here I'm expecting that particular move to go back towards the top of that particular the beginning, the opening of that bearish candle over here next to the 95 96 points, and nothing it's happening. So now we are in a sideways movement. We're going horizontal sideways, still in an inside week candle for the third week in a row. So now I'm expecting the markets to continue in that particular inside week candle, and we need a close above, you see, the 50% of that particular bearish candle. That's your 85 points, just above the 13 weeks moving average here in red, and your 8 weeks moving average at 85.30. Okay, and if you can do that, then you're gonna see that move, boom, going higher and back here at $95. Okay, for the XIV. Now let's move on and let's have a look at the Russell 2000 US 2000 small caps. Oh, sure, that's not, I'm not looking for music over here. Okay, small caps, here we go, boom. And small caps, exactly the same thing. You see, bam bam, going down over here. That's a good morning pattern. Okay, you see market over here trying to pause. You see indecision, now pause, cancellation of the more move towards the downside, and now boom, going back higher. So now that particular move, it seems to me that we are doing that, and now we are going back higher. Okay, over here see also a gap up above the 4 weeks moving average. That's your 26 weeks moving average, 21 weeks moving average over here, 4 weeks moving average in red over here. That's your 13 weeks moving average above all the moving averages here, just at the beginning of that particular bearish candle. Now we are back at 14.15, 14.13, and now what I'm expecting continuation, and here and move, bam, over here over 14.20 and go higher and towards the 14.40 points for the Russell 2000. Okay, so that's it for your Russell. Now let's have a look at bonds. First of all, the T notes, that your TY 10-year. Here we go. Okay, and take a look at that. Last week, what did we have over here? Now you're back at resistance. You see the resistance of the in green, that's your 208s, 208 weeks moving average, acting as a strong resistance here at $127. And now we have, what do we have now? Now we are expecting, already the bond market's already open, because here we are past midnight over here. We're already on Monday, September the 4th here in Europe. So that's next week, last week you have that huge spike, that huge doji. You see over here, that's a shooting star at resistance, and now we are rejecting higher prices. We are rejecting over here the 127.50, $127, and now we are going back lower. So you see the pattern over here. You see, take a look at the pattern. You see over here, that's your uptrending channel. Oh, excuse me. Boom. I'm gonna do it like that. You see, that's your uptrending channel over here. That's your support over here. That's your resistance. Okay, and now we are at the channels over here, like that. Boom. You can do it like that or like that. See, that's your channels support over here. So now what we're trying to do, you see, that's the interaction over here with all the moving averages, and now we are just going back higher. So now if we fail to go and to close above 127 points. First of all, to be above that particular resistance over here, 127.20. What we can see instead, that's a bearish movement. We can come back and retest that particular channel's support and bounce from there, here, and then here, boom, try another time, a third time. So that's gonna be a multiple top over here at 127.20, 127.10, 127 exactly, and trying to go higher. But if you fail, boom, you're gonna remain in that particular level. Okay, but the bonds are, I'm still bullish on bonds, but now let's see what's gonna happen if you can go much higher over here. And remember, if the bond and the bond yield are going opposite ways, so if you see a higher bond price, that means that the interest rates of the bonds are lower. Okay, so now let's have a look at the 30 years. What's the matter with Ursha? Okay, here we go. Okay, and that's exactly the same thing as you can see. Oh, here, huge gap down, bearish gap at the opening for now, for the week starting on Monday, September the 4th. And as you can see here, bearish gap, boom, take a look at that, already below the 4 weeks moving average, and that's a over here shooting star over here, huge doji. See, exactly the same thing as the treasury notes here, rejecting the $157 strong resistance, and now boom, it seems to me that we are going back lower. So now what can we expect? I'm expecting more moves toward the downside, and you can see a move like that. You see over here, and it's gonna do boom, going down like that. Or maybe during the week it can try to retest here, fill the gap with a huge spike. You see a huge shadow, and then boom, going back lower, or maybe we can go back higher, but a lot of indecision. But that's a huge bearish gap, and that gap must be filled. You see, you already see that. You see, but it can take like 1, 2, 3, 4 weeks for the market to come and fill the gap. So now I don't know, but that's exactly the same pattern. You see, and if history repeats itself, you can see the same thing. You see interaction with the moving averages over here. Take a look, that's exactly the same thing, but now we have one more component, and the new component over here, that's your 52 weeks moving average over here. We are already below the 4 weeks moving average. That's your 8 weeks moving average, 13 weeks moving average, 52 weeks moving average here in pink. Over here, that's your 21 weeks moving average, and in black over here, that's your 26 weeks moving average acting as support. So now we can come here, have a interaction with those moving averages, and you see that's over here. What do we have? We have a lower high. You see, yeah, higher lows, excuse me. That's higher lows, another higher low over here, and boom, that's it. And over here we have higher highs. That's a top over here, great level of resistance, and maybe we can clear that particular level. But for the moment, it seems to me that the markets, the bond is rejecting that particular price level of $157. Okay, so that's it for the bonds. And next, let's move on. Yeah, the DXY, the US dollar index. A lot of things happening with the dollar. And over here, what do we have? The dollar. Okay, you see, take a look at that over here. Yeah, so for me, as you can see, these are my projections for the dollar. My first target for the dollar was the 208 weeks moving average, and take a look at that, already over here at the 208 weeks moving average, and boom, bounce over here. That's a key support level. Take a look at all the moving averages over here. But now we're gonna do something. I'm gonna open up another investing, and you're gonna have a look at the euro dollar, and you can see, and you would see what I mean by that. It's gonna be, you see, it's gonna be pretty interesting. So now let me load up my presets. Okay, so now I'm gonna give it some time to work. Okay, there we go. No, not now. And now I'm gonna load euro dollar. Okay, this one, and take a look at that. You see, what is it over here in green? That's your 208 week moving average. You say that is the perfect mirror, perfect opposite. You see, we are trading in a huge range over here, but take a look, the market reaches the 208 weeks moving average, acting as a resistance. And now what's happening over here, we are rejecting that particular level. But take a look over here. What do we have over here? Yeah, no, this one. Okay, what do we have over here? Over here we have a gap, and that gap must be filled over here. So now I'm expecting the market to reject that and the euro to come down, because you need to understand something, that currencies are made for macroeconomics. Okay, and the fundamentals, what are they? When you're looking at the fundamentals, the US, let's do it here quickly. Let's go back, let's say over here. Yes, you're going to understand something, you know. I'm going to give you some freebies over here. You see the balance of trade of the US, it's in deficit. Okay, and on the other hand, the balance of trade for the euro, okay, one more time, euro area over here, it's in a surplus. So the eurozone, euro area, it's an exporting block. They are exporting goods, and over here, if you take a look at the forecast, they're going to remain an exporting block. Okay, in order for them to be competitive in the international market, in international trade, they need a weaker euro. Okay, so now that's what we call a currency wars. Remember, Donald Trump, he was I'm not gonna say insulting, but you see, talking about China and saying that China, they are currency manipulators, because that's a currency war. When you are in a currency war, all the exporting countries, they need weaker currency in order to export their goods, and that's it for the euro. Okay, so now the euro, that's a range. In that particular range, the euro it's comfortable, you see, with that particular range, because it's not too it doesn't cost too much to export their goods. But if the euro now starts to go much higher, let's say for instance towards the 125, 130 and 135 and even 140, that's too expensive. So they need to weaker the euro. So then the central banks, they're gonna act, and they're gonna start doing what they do best, and that's it. And that's the case for the for that particular currency war. So now maybe that's too much, you see, falling like a let's say for instance, yeah, that's 100 pips over here. So now more than 100 pips close, yeah. So what you need to do, from 800s, let's say, go back over here towards 400. So that's maybe a 400 pips, you see, to retest that particular pivot point over here. Let's say for 800 pips over here, fall to 1.50. That's a 300 pips. So that's it. So that's going to be a great move. But remember, over here, what do we have? We have a gap over here. So now going back towards the dollar, the Dixie, you understand that over here also we have a gap. Now the dollar is weaker, but I don't think that it can remain at that level, because the other countries are gonna start to act in accordance to that weakening of the US, trying to weaken the dollar. Okay, so that's it. Now let's move on. So now, yeah, what I'm expecting sideways movements over here and start to see the dollar going back higher. First of all, we need a close above the 4 weeks moving average over here. Let's amplify it. Okay, 4 weeks average over here, and then 8 weeks moving average, and then coming back towards the 13 weeks moving average. So that's what I'm expecting over here. You already can see a gap down, and now let's see how it's gonna react, how it's gonna move during the week. Okay, so for the moment, for the euro dollar, and the dollar is gonna remain flat without a movement, but you see huge indecision, huge spikes. So we can see volatility, you see, trying to flirt with the 92 as support over here at the region of the 208 weeks moving average, and over here trying to touch and interact with the 93.50, 93.20, 93.50 as a resistance. Okay, so that's it for now. And next, let's move on. So that's it for the US. Now let's have a look at some commodities. Yes, first of all, over here, let's begin with the dollar. No, the dollar, no, oil, excuse me. Crude oil. Over here, crude oil. Bam, 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 crude oil. And crude oil is doing absolutely nothing. Nothing. Inside week candle last week. No, not an inside week, but a bearish week, rejection of lower prices. We remain above that's your 104 weeks moving average over here, above the 13 weeks moving average over here. That's your 21 weeks moving average, 4 weeks, and convergence between the 26 weeks and the 8 weeks moving average, and over here acting as a top resistance, that's your 52 weeks moving average. So we're going sideways. Maybe that's a ABCD type of pattern. You see the A, the B, C over here, and now we're looking for the D over here at 54. But first of all, you need to have a close above 48.50. Better, it's gonna be 48.50, and then boom, continuation towards the $50 a barrel. And next, above the $50, $50 a barrel, and next, yeah, we're gonna have a free ride towards the 54 weeks moving average, 54, excuse me, resistance. Okay, so that's it. But first of all, target close here above 48.15 and 48.50, and then boom, you need to go also above that particular level over here, 49, and then 49.50. Okay, so that's it. Now let's have a look at precious metals. See, huge run for gold. Let's have a look at that over here. Gold futures, bam, there we go. Over here, see, wow, it's continuing the rise. Take a look at that. Now gap up over here, wonderful. You see, that's a powerful candle, and now I'm expecting to have a continuation, but that we already have over here a gap up. Maybe you can see a little bit of shadow spike, and then gold can trying to go higher. But remember, if you see a reverse in the market, if the Dow is going back towards the 22k, if you see the Dow above 22k during the week, you see a continuation in the upsides for the Nasdaq 100 and also for the S&P 500 and stuff like that. and the bonds starting to go lower, but gold's gonna be lower a little bit, but let's see what's gonna happen. Okay, for the moment it's bullish, so if you were long gold, now it's time for you to secure some profits, move your stops higher, and take some ounces out. And in the physical world, in the real world, but now it was last week was time to still you still have to accumulate. So don't worry, don't worry about gold prices, but gold's gonna go much higher, okay, from now. So be careful and be cautious, when trading gold, and hopefully you're taking profits and stacking your physicals. Okay, so now let's continue. So gold, I'm expecting to see more moves towards the upside, but take a look, be careful for the gap, and also take a look at what the market's gonna do. Now silver, oh no, excuse me, SI. Okay, silver futures. And now for the silver, exactly the same thing. Strong bullish week, silver doing great, above all the critical moving averages. That's your 52 weeks moving average, bam, above that. And take a look at the 4 weeks moving average. The 4 weeks moving average is leading the direction. 4 weeks moving average is at more than 45 degrees, so that's very bullish. And where are we going? We're going back towards the $18 mark for silver. So that's it, $18 for silver, and next 18.60 for silver. That's my target. But now we have a gap over here, so all gap must be filled. So maybe they're gonna let silver rise towards the 18.50 and then boom, going back lower, because you see the pattern over here, that's lower lows and lower, oops, excuse me, and over here lower highs. Now there's a trend line over here, we break above the trend line's resistance. Now maybe we can go back higher. First of all, here the pivot point, that particular resistance over here, intermediate resistance over here, boom, break higher. And now next target is going to be that particular level here in blue, the line in blue, 1840. Okay, so silver is going higher, but also remember what I told you earlier, be careful. Let's have a look at what's going to happen with the markets. If you see the market starting to rise, maybe take a look. Last week all markets were up and silver also went up, so anything is possible right now. So you can see silver and the markets going higher. Okay, so that's it. It seems to me that silver is going higher, the stock market is going higher, but the bond prices are bonds, or people dumping bonds. So that's it. Gold and the stock market higher. Okay, now let's enter the crypto space. Bitfinex, but that's nothing. I'm gonna do that here. Yeah, I have stuffs here, but first of all, let's have a look at the fundamentals over here. Fundamentals on statistics and the ranking. You see number one, you have Bitcoin. You see the market cap of Bitcoin at $76 billion, more than Netflix now. And here Ethereum at number two, market cap at 32 billion. Litecoin is on the third spot, 4.1 billion market cap. Ethereum Classic ETC fifth spot, 1.8 billion. Monero number 7, 1.8 excuse me, first of all, Ripple XRP, $8.7 billion. Number 7, Monero at 1.8 billion. 8, Omisego at 1.5 billion. And 9, Qtum at 1.6 billion. And number 10, IOTA at $2 billion of market cap. So that's it. We're only going to focus on the top 10, and that's it. Bitcoin and Bitcoin Cash is doing great. And now let's go back. Oh no, first of all, I'd like to show you something no, but let's have a look at the Forex market. the forex performance, you see, between all the currencies here. And let's have a look at all the major crosses. You see all the major currencies, and here you have Bitcoin. And if you take a look at Bitcoin on your weekly performance over here, weekly Bitcoin best performing currency, Bitcoin on the monthly more than 70%, and yearly more than 700%, more than any other fiat currency over here. So crypto is Bitcoin best performing currency. So that's it. Okay, now let's do some charts and some technical analysis. And over here, as you can see, Bitcoin still above the 4 weeks moving average. You see here a huge spike, and that's a pointer. Over here we had one a few weeks ago, and take a look next week, trying to go back, trying to go lower, interaction with the 4 weeks moving average, trying to reach the 8-week moving average, and then bam, last thing you know, Bitcoin was higher, new highs, and at $4,500. Now Bitcoin at $5,000, and now back at $4,600, and now maybe it's going higher, but that's a pointer. So Bitcoin remains strong above the 4 weeks moving average, and Bitcoin is going back towards the $5,000. Okay, so that's it. Bitcoin for me is going higher, back to the $5,000. Okay, next let's have a look at the GBTC over here. First let me GBTC. Okay, and GBTC also doing great, but take a look at that. That's a huge shooting star doji over here at right above the 4 weeks moving average. But you see, for now it reaches the $1,050 for the ETF, going all the way back down towards the $800. And let's see what's happening. You see now that's huge. Over here you see we have a gap, so maybe take a look if we need to interact and to find a support. The past support was just here at $500, region of the 13-week moving average and 8 weeks moving average. So that's huge. You see, more than a that's a from now that's a $300 fall. And also over here we have a small gap. Take a look here, see a small gap over here, and we need to interact with almost two moving averages, the 4 and the 8 weeks moving average. And take a look, a lot of distance. That's a wide spread, and that spread means volatility. So in Bitcoin and here with the GBTC we have a lot of volatility. So pay attention to what Bitcoin is gonna do during the week. Okay, but expect volatility. You already know with those cryptocurrencies, they are very, very, very volatile, so we need to expect volatility, so be prepared. Okay, now let's move on. Ethereum versus the US dollar. Yes, this one. And over here, what do we have? You see over here, that was a great move for the Ethereum, all the way back from here, from $165, going all the way back first of all toward the $200, and now it's here, came back towards the resistance but failed to have a close at resistance level, rejected it. You see over here, that's a shooting star over here at resistance. And then what do we have? We have another doji, and we remain above the 4 weeks moving average, just under the $400 mark over here. But we remain bullish on those cryptos. What we need now, we need a close just above $380, and let's see if we can close above that particular level and continue our march and our rise towards the $400 and even higher. If not, we have to expect a little distribution like that, so people taking profits. So we can see Ethereum going back lower, maybe towards $300, to interact here with the 8 weeks moving average and the 13 weeks moving average. Okay, but for the moment that's a sideways movement. Okay, and be cautious. If that particular candle here is not a pointer that points higher prices, probabilities for higher prices, so that's gonna be a reversal. But for me, for the moment, that's just rejecting the $400 mark. But for me, it remains bullish. You see, that's exactly the same thing as here. See, and next week, boom, going back higher. But for a moment, that's a lot of indecision. Okay, so now let's continue. Let's do Litecoin, LTC, USD, that one. And for your Litecoin, that's exactly almost the same thing. You see over here, huge week. Last week was a huge week. You see people talking about Litecoin above $80. We almost touched the $100 and then we rejected it. We gave back to the market and now we are here above $80. So now what I'm expecting for that particular cryptocurrency is the Litecoin to move sideways. But you can already see the pattern. You see Litecoin doesn't crash. It holds the price until the moving averages reaches the actual price. You see, as you can see here, see too far extended. See over here, great extension. See, but 1, 2, 3, yeah, just waiting for the moving averages to reach the price level, and then boom, going back higher in step stairs, uptrending step stairs pattern. You see over here, same thing, moving sideways, 4 weeks, 8 weeks, 13 weeks, and then boom, next leg higher. You see now over here, exactly the same pattern. You see, take a look. The moving average is at $65 and now the price is at $80. So we're going to remain in sideways movement. We're going to remain horizontal for a few weeks, maybe for a month, maybe until the end of the day, end of the year, excuse me. See, maybe until November. So that can be, you see, 8 weeks in order for the price action. See, for the 1, 2, 3, 4 weeks moving average, 8 weeks moving average, and 13 weeks moving average to reach the price level, and then from then going higher. Okay, so expect sideways movements for the Litecoin. And next we're gonna end with Ripple, and then that's it. RAPPL, Ripple, US dollar. I had one with GDX, but no, that's nothing. We're gonna do it here with yeah, with this one, Bitfinex. And over here, oh sorry, I don't have any presets, but over here that's exactly the same thing. You see from here, that's your resistance, and now here we are at support level at 15 cents, and now we are above the 4 weeks moving average and the 8 weeks moving average. You see over here, that's your convergence, and now that's a huge pointer. And what can we expect now here? That's your 13 weeks moving average. I'm sorry, but the platform doesn't have a lot of data for Ripple, but now we see we're going sideways, and maybe now we can see that's those 2 pointers over here form a tweezer tab, but we don't have, you see, a lot of information, so I don't know if that's that's the pattern is. I cannot give any, you see, the oh, that's that dash over here. I can give that particular pattern validity, you see, because I don't have a lot of data, you see, to back it up. Let's see this one. So yeah, that's it over here. I had my preset over here, but now you see me what I was expecting. I was expecting the ripple to go back towards the 35 cents, but you see it seems to me that we're going to remain in sideways movement. So we're going to have price fluctuations between the resistance over here, the last high, because that's a bearish candle over here. You're going to have movements between 35 cents and over here 15 cents. See, so we're going to go up and down, up and down. So that's it. So if I need more data, you see, because if you go in daily you can see the price action, but that's a lot of noise, you see, a lot of small movements due to the price. The price doesn't move that much. Expect here we have 4 days of full volatility, but next thing you know, boom, things are now it's calm, you see. It's moving just sideways, but the range is huge. That's $15 and 55, let's say $30, 13 cents, 30 cents and 15 cents as a support, and 30 cents as a resistance. Better said, 26 cents. Okay, so that's it for this week. So once again, thank you for hanging out with me, and hopefully, and I hope this will help, and see you next week. Have a great trading week, everybody. Bye bye.